Okay, welcome to the deep dive. In a world where the information fire hose just never stops, it can feel, well, completely overwhelming trying to figure out what truly matters. Never mind trying to keep up right.
Exactly.
That's where we come in. We're here to help you cut through all that noise, really distill the essential insights, and give you the knowledge you actually need to be well-informed and fast.
Yeah.
So today our mission is to take a really deep dive through a truly diverse stack of sources. We're talking everything from cutting-edge financial reports to landmark legal rulings.
Yeah, a real mix.
We're going to piece together a panoramic view of some pretty significant global shifts. And these are impacting just about everything, from what you watch, how companies get funded, even maybe how we travel for business down the line.
And our goal here, really, by connecting these pieces, which might seem disparate at first glance, is to try and reveal the underlying currents, the trends. We want to help you not just grasp what's happening, but maybe more importantly, why it truly matters for the bigger picture. Hopefully get you those aha moments where it all clicks.
Okay, let's get into it. Let's begin where, well, many of us spend a lot of time, and where power dynamics are shifting really rapidly. The world of media and digital content. We're kicking off with insights from Lorna Tilbian. She's a very influential media analyst and investment banker.
Oh, yes, very well known.
She's been highlighting this accelerating consolidation across publishing, broadcasting, digital platforms. It really feels like a huge game of musical chairs among the media giants right now.
It really does. And Tilbian's analysis is particularly sharp when she warns that these legacy media companies, they must embrace things like AI, subscription models, hyper-targeted content delivery.
If they want to survive.
Exactly, if they want to stay competitive. And a crucial point she makes is about how European media, specifically, can maintain some autonomy when faced with, the sheer dominance of U.S. tech giants.
And we're actually seeing a big move in that direction already, aren't we? Germany's RTL group. They're acquiring Sky Deutschland from Comcast.
That's right.
So is this just another corporate deal? Or is RTL genuinely making a strategic play here to challenge the U.S. streaming giants? I mean, how realistic is it for a regional player, even a beefed-up one, to really compete with Netflix or Disney Plus games?
That is the critical question, isn't it? And I think it's more than just regional pride. It's a strategic recognition, really, that local content combined with technological scale.
Yeah.
That's perhaps the only viable counter.
Against the data and distribution power.
Precisely, the might of those U.S. giants. So RTL's goal seems to be creating a stronger European media player, combining that local production expertise with broader tech investment. It could be a blueprint, maybe, for other regions facing similar, let's call it digital colonization.
Okay, speaking of digital power and maybe accountability, we absolutely need to shift focus to Brazil. There's been a landmark ruling there. It feels huge.
It really is significant.
Beyond the headlines, what's the real strategic impact here for giants like X, Facebook, YouTube? Are we potentially looking at a fundamentally different internet going forward because of this?
That's exactly what this ruling suggests, potentially. Brazil's Supreme Court has decided that digital platforms can, in fact, be held legally responsible for harmful or illegal content posted by their users.
Wow.
And this directly challenges the long-standing global standard known as safe harbor.
Which shielded them for years.
Right. It essentially shielded platforms from liability for user-generated content. Now, you've got two sides to this, naturally. Critics are worried this could lead to widespread censorship or maybe over-moderation, stifling free speech. But supporters believe it will finally force these tech giants to take content governance seriously, to invest more in ensuring their platforms aren't, misused for illegal or dangerous activities.
It's a really fine line.
It is a very delicate balance with truly profound implications for how content gets moderated globally.
Okay. We've seen how the battle for digital power is playing out on our screens in courtrooms. Now let's shift our gaze to maybe an even more foundational force shaping our world. The flow of global finance and investment.
Right.
First up, SoftBank. The chief, Masayoshi son, he's hinted at succession plans after, years of those really high-profile, sometimes quite controversial tech investments.
Yes, certainly made headlines.
So what does this potential leadership transition signal for SoftBank's future, especially given their, let's say, varied performance recently?
I think this is a major inflection point for them. Sun is focusing on grooming a new generation of executives, specifically for the Vision Fund and the wider SoftBank group, and it does signal a potential shift maybe towards more disciplined investment, moving away perhaps from the huge, almost speculative big bets SoftBank became known for.
Yeah.
But the deeper insight here, I think, is that SoftBank, once the sort of poster child for speculative tech growth, seems to be pivoting now towards the foundational layer AI infrastructure.
Building the plumbing, not just finding the next big app.
Exactly. It suggests a maturation, maybe a reevaluation of how real value is created in this AI boom. Less about finding the next unicorn, perhaps, and more about building the essential rails for all the unicorns.
Okay, moving from established players to emerging hotspots. We have Metlen, a rapidly expanding Greek energy company. They're planning a London Stock Exchange listing, an IPO, for August 2025.
That's right. And the purpose of this IPO is pretty clear. Raise significant capital to expand their solar, wind, and hydrogen projects, primarily across Southern Europe.
Green energy focus.
Definitely. And it clearly reflects renewed investor interest in green utilities, especially given Europe's really strong push to diversify energy sources away from traditional suppliers and meet those ambitious climate goals. It's a clear signal of where capital is flowing, particularly in Europe right now.
But it's not all green shoots and straightforward investments, is it? We're apparently seeing the unwelcome return of bet-the-farm securitisations. That sounds ominous.
It does have a ring to it, doesn't it?
Given the clear warnings from, not that long ago, why are investors still drawn to these high-risk products? What's the hidden appeal, despite the flashing red lights?
Well, that's the core of the problem, isn't it? These are complex, high-risk financial products. Essentially, you're bundling loans or assets, packaging them up, selling them off to investors.
Like mortgages before '08.
Exactly like mortgages before '08. But this time, they're backed by things like agriculture, farmland, even food production. So yeah, the comparisons are uncomfortable, and the warnings about opaque risk structures are there.
So why do it?
Investors are chasing yield. Simple as that. Often, in a relatively low interest rate environment, the hunt for higher returns drives appetite for riskier assets. But regulators are definitely watching closely. There are fears of another hidden bubble.
History repeating itself.
It's a classic case of history potentially repeating, just with a new asset class. That relentless hunt for yield can sometimes blind investors to the underlying risks.
Okay, speaking of complex financial structures and Europe, former Italian Prime Minister Enrico Letta, he issued a pretty stark warning recently during an EU policy panel.
I saw that.
He said, and I quote, "If Europe continues to operate as 27 fragmented capital markets, it will remain financially dependent on the U.S. and become a colony of Wall Street." Pretty strong words.
Very strong words. And they really underscore a deep-seated concern within Europe. Letta's call is for a full capital markets union.
What does that actually mean in practice?
The idea is to make it much easier for European companies to access funding domestically within Europe, reducing their reliance on American investment banks and stock exchanges like New York. It's fundamentally about economic sovereignty, building internal financial muscle to compete globally.
Right, keeping the capital closer to home. Now, staying on the theme of oversight, a major accounting oversight body has just warned about the big four firms Deloitte, EY, PwC, KPMG. Apparently, they're failing to track how AI is impacting audit quality.
Yeah, that's a significant flag.
These firms use AI for everything these days, right?
Yeah.
So what's the actual concern here? Is AI making things worse, or do regulators just not understand the tech?
It's probably less about the tech itself and more about transparency and accountability. While these firms are absolutely using AI and likely gaining efficiencies from it,
Sure.
regulators are concerned that they lack clear, transparent metrics. They can't easily tell if AI is actually improving audit accuracy or, crucially, if it might be undermining it in some ways.
Introducing new blind spots.
Potentially. So it raises important questions about accountability, about standards in a sector that is absolutely critical for global financial stability. The worry isn't necessarily AI is bad, but more, are we properly measuring and controlling its impact?
Got it. And to wrap up this section on finance, we have the case of Jes Staley, the former CEO of Barclays. He's just been formally censured by UK financial regulators. Why? For misleading the bank and the authorities about his ties to the convicted sex offender Jeffrey Epstein, described as a serious failure of judgment.
And that really underscores the ongoing reputational risks that financial institutions face. It frankly raises broader questions about ethics, about due diligence, even at the very highest levels of banking.
You'd expect better judgment at that level.
You would. And it's a powerful reminder that despite all the sophisticated technology and layers of regulation, human judgment, personal integrity, they remain paramount. Cases like this can seriously erode public trust, not just in one bank, but in the entire financial system.
Okay, let's shift gears now. Let's talk about changing habits and their broader impact, specifically looking at how we work and travel. Heathrow Airport has put out a cautionary note about weakening demand for business travel, specifically between the UK and the United States.
Yeah, this is interesting. Despite a pretty clear rebound in leisure travel, people are definitely flying for holidays again. Corporate bookings are noticeably lagging behind.
Why is that?
Well, Heathrow is citing a few key factors. The rise of hybrid meetings, like the one we're having now, basically.
Right.
Stricter corporate travel budgets, companies tightening belts, and also increasingly sustainability concerns playing a role.
This is not just a blip.
If you connect this to the bigger picture, it really suggests a potential long-term, maybe even fundamental shift in work culture, not just a temporary post-pandemic thing.
And this isn't just about, a few fewer people in business class. This could have a significant long-term impact on airline revenue forecasts, maybe even airport infrastructure planning down the road.
Absolutely.
It signals that the post-pandemic world isn't just snapping back to normal, it's defining a new normal.
It really raises an important question for all of us, doesn't it? If this trend continues, how will it reshape global business connectivity? How will it affect cross-border collaboration, the very nature of international commerce?
Definitely food for thought. Okay, so let's try and tie this all together. What does this all mean for you listening? Today, we've unpacked some major threads, haven't we?
We have.
The accelerating consolidation and maybe increasing regulation in media and tech. The evolving landscape of global finance with both exciting opportunities like green energy, but also those potential hidden risks like new securitisations.
Right, the duality.
And these fundamental shifts in how we actually work and travel.
And when you connect these seemingly disparate insights, from European media challenging U.S. streamers to a new wave of agricultural securitisations, from SoftBank's strategic shift to the changing face of business travel, they really do collectively paint a picture of a world in dynamic transformation. Understanding these connections, understanding these underlying forces that can truly provide a significant advantage in navigating whatever comes next.
So here's a final thought to leave you with. As technology keeps accelerating these changes across industries, across continents, how might these various shifts we've talked about, AI and audits, platform liability online, green energy investment, declining business travel, how might they converge? How could they reshape our global economy and, our daily lives in the coming decade? What new challenges, but also what new opportunities might arise from these interconnected transformations? Definitely something to ponder.